Welcome back, everyone. Just a quick sound check and then we can get started. Okay. What's everyone doing this week, this month? We are going to start now. Just waiting for more people to jump in. Audio check. Okay, audio seems to be good on my side. We can get started. Just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general advice, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. We don't offer any managed account or any paid signal service or anything like that. We just don't do that. Okay, so just be aware if anyone is guaranteeing you a guaranteed returns, obviously that's not going to happen in any market. CFDs and Forex are leveraged products that carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives. Strategies and charts used in this presentation are, for example, only. You are reminded that past performance is not indicative for future performance. Okay, so this is probably something that we need to talk about. This is the UK 10-year bond. Okay, you've seen how it dropped, and then situation got worse. We did talk about this on Monday's Outlook. We're just waiting for comments from Bank of England. We got a little bit of a comment from Bank of England yesterday. Didn't really do much. Just in the past 2 hours, Bank of England just announced they're buying back long-dated bonds. Okay, and they're gonna stop selling their bond selling program. So that should help bond prices up a little bit. There is a caveat to this. This is actually a normality, I guess. This is, I think, what the market has been expecting. We have that surprise announcement from the new UK government about the mini budget. Remind me later. Okay, so we did talk about the mini budget stuff on Monday's webinar. I did mention that a little bit on the Outlook, but if you guys are in the dark on what's going on with the pound USD, not necessarily that you have to be trading the pound USD to understand what's going on with the market here. This is having an effect on all the other markets as well. So, but this is the 10-year bond yield. 10-year bond prices that you guys are looking at right now. We do see a little bit of a recovery today. That's because Bank of England intervenes. I will go into the details in a little bit, but for those that you guys are wondering what's going on the fundamental side, why is the market moving like that? I did warn about the potential for the correction to happen on Monday. Might not last that long, so we are currently back on track with pound USD. Okay, so this is the UK 10-year bond. I'll bring up the yield right now. This is the 10-year yield. Today we are looking at a little bit of a move to the downside for the yield. So for those that are new to treasury market, if we see bond prices falling down, then we have the yield going up. So if we have bond prices going up, then the normal market reaction would be that yield should drop down. Okay, this is the 10-year yield. This is the 2-year yield. Okay, obviously we're still there's still a little bit of a mismatch here in terms of the 10-year yield and the 2-year yield. The 2-year yield will be more interesting to look at, but for now we are going to be focusing on the 10-year yield. Okay, so let's take a look at this one here. If the yield goes up, then the pound USD should be going up. We just don't have that scenario. We have the pound USD falling down, right? This is basically what it is for the pound USD. This is the stuff we talk about on the Outlook. Overall, we are still within a huge downtrend. We are expecting a little bit of correction here. The possibility of a correction was up to 1.1. It starts. The limit was basically 1.08 to 1.1. So we already have that 1.08 rejection yesterday. We have that 1.8 rejection today. This is quite normal because the yield starts to fall down. That's more of a bearish pressure for the pound USD. Okay, so for those that missed out on the whole mini budget thing, Basically, the new UK government is kind of giving out handouts, energy caps. That's going to be funded by more government borrowing, which is the largest government borrowing since 1972. They are basically going back to the 1980s economics, which you want to call it Reaganomics if you want to. Margaret Thatcher did that. The Ronald Reagan did that for the US economy. So inflation is high and they're boosting demands, which is not really in line with what the Bank of England is attempting to do, which is really tightening the monetary market there. Okay, so it is a little bit conflicting. So a lot of people say, you know what, we are out from the UK market. This is sending a lot of mixed signals into the market, with the government attempting to boost demand so that the economy will grow, while the Bank of England is attempting to reduce demand just to bring down price stability. So there is a conflict between fiscal policy and the monetary policy right now in the UK. So there is a little bit of that confusion there. Let's go into the hourly time frame. You can see how clear it is on the hourly time frame that we were kind of expecting that rejection to happen. If you're wondering what it is, you'll find out more about this on Friday's session when we talk about Fibonacci, but we are kind of expecting, within 50%, 61.8% in terms of correction. That's completely done. Right now, we have that rejection from 50%. This is on the hourly time frame. We have a failure to break above the Ishimoku cloud yesterday and today. So right now, if you're planning to go long on pound USD, it's a little bit tough, especially with Bank of England. Let me just read it out. This is basically coming out from the Bank of England. They will... Oh, by the way, market was expecting an emergency meeting from the Bank of England. That's not going to happen. Basically, Bank of England is going to meet in November to hike rates. Okay, it could be a huge rate hike. It could be a 1% rate hike. But anyway, with the bond buying, it's not going to be... It is going to be time sensitive. There is time in there that's going to be involved, but it's not really mentioned from the statement coming out from the Bank of England just now. I'm still reading through it, but basically there's one thing to note here. Basically the whole bond buying program that they're doing right now, there's no limit to it. So maybe it is very similar to how the JGB yield cap is running right now. And you know how that affects the Japanese yen. It destroys the Japanese yen. So if the Bank of England is going to be doing that, then that's likely going to take the pound USD even lower. Okay, so got all that. We're really summarizing everything here, so we can take a look at the market here. But you need to understand what's going on right now. With the whole pound dropping 868 pips on Friday and Monday. That's really pulling down the currency basket against the US dollar there. So we do see the dollar index really pushing up higher. So let me bring up the dollar index. We'll take a look at the dollar index. The projected was close to 115. We were kind of kept, I think today when I take a look at it, it was kept around 114.50, 114.60 on the dollar index. But anyway, the projected target for this one is actually still 115. So there's still a little bit of a room to go there. There is a lot of concern. If you are long pound USD, there's a huge risk to hold that long position at this point in time. Fundamentally, it's not being supported. Sentiment-wise, it is not being supported as well. There's just a lot of concern with the UK economy at this point in time. And the Bank of England actually warns of a risk to the UK financial stability as it intervenes today. Okay, so last week, no, was it last week? Was it last week? Yeah, I think it was last week. Wow, there's a lot of things going on in the market. But last week, the Bank of Japan intervenes. We'll take a look at the dollar yen later on. That's intervening in the currency market. With the Bank of England, they're intervening in the treasury market. So it will have an impact on the pound USD. But right now, I'll just be quick on the pound USD. So you guys asking me about what my thoughts are on pound USD. I would prefer to go short, yeah, but make sure your stop losses are, at least if you're planning to go short, at least your stop losses should be above this high there. Your stop losses basically need to be about 1.0850. This is going to be about 250 pips, 260 pips of stop loss. Some of you probably wouldn't take it, but swing traders or pound USD traders, I know a lot of you guys are still holding on to that short position. I still have that short position. I shared that on the Telegram channel, but yeah, still holding on to it. If you guys are looking at this and say like, what the risk is like 250 pips, 260 pips, you guys are not wrong. It is 250 pips. That's basically the movement within 1 hour or two. In a sense, it's kind of okay, because if you measure the drop here, it's basically about 10 cents, right? It is about 1,000 pips. So you're looking at about 20% of the whole drop that's been experienced in UK, sorry, in the pound USD. So it is not going to be for everyone. This is on the early time frame, by the way. We are looking at this on an intraday scale. This is your intraday resistance, which is still at 1.0840 and above. Okay. So for this one to reverse whatever it is doing right now, for it to go up to, for it to go up even further, it will need to break that 1.08 resistance, which is really far from where price is right now. So, maybe a shout out if you guys are on the short side or on the long side. But with the pound USD, that there is, it gets a little bit interesting, because right now the view on the pound USD is that we are, well, not we, me and a lot of other analysts out there and economists are looking at a potential for parity with the US dollar on the pound USD. This is an all-time low for the pound USD, so we are really in uncharted territory right now. In terms of projections, we might get a little bit of a short-term projections. We could be using this swing high. Sorry, we could be using this swing to kind of identify the projections. Let me clarify a little bit. You are going to learn about this on Friday when we talk about Fibonacci. But right now, if we take that swing, if we take that swing in terms of the correction that it's done after the drop on Friday and Monday, the 161.8% is actually at parity. So is it going to be in line with what we're looking at? It could potentially be, but right now, if you're thinking 250 pips of stop loss, that's huge. The minimum target that we are looking at is around 380 pips. So that's about 1.5 in terms of risk to reward ratio. If we go for parity, that's going to be about 1 to 2 risk to reward ratio. So in terms of range, it does still make sense. Right now, we are looking at the potential towards parity at this point in time. But hey, just to be safe, we are going to be looking at 1.02 as a potential support first on the pound USD if it does break below 1.05. All right, Danny, pound still holding on short. Okay. You guys that jump in on the Monday session probably still holding on short on pound USD. So you guys are still holding on short. Good job on this one. It is a huge surprise. I don't think anyone kind of anticipates the move on Friday and Monday. It is a little bit political. So yeah, at this point in time, hey, good to be on the right side. Black Wednesday, yeah, I mean they are comparing it to that, what happened in the 80s. So yeah, I guess so. All right, so pound USD, we're clear on pound USD. My stance is pretty clear. I wouldn't want to go long on pound USD at this point in time in terms of what's going on in the UK. Kind of a little bit suicidal at this point in time. It was recovering a little bit because market was expecting that the Bank of England might hold an emergency meeting to hike by 1% before the November meeting. They're not. But I don't know. Bank of England's is they're a bit wishy-washy here. But chief economist How Peel, he has a speaking engagement last night, and he basically say like no, they're still not gonna hold that emergency meeting. They are gonna be doing that in November. I guess from today's movement, from the intervention that the Bank of England has done, I would price in about 40% chance that they could be holding an emergency meeting. So I'll enjoy it while it lasts. We're just right on the momentum at this point in time. So go with the flow, I guess. But at this point in time, just don't assume that they are going to intervene. And, if you guys are thinking, oh, yeah, it's really low right now, let's buy low on the pound USD and we'll be good. No, case example would be on the Euro USD. You did that on the Euro USD, you are in a lot of pain at this point in time. Okay, so a lot of people did that. Once it's around 99 cents, but it broke below 99 cents, broke below 98.50. We talked about this on the Outlook on Monday as well. The overall projection was actually towards 96 cents. We are below 96 cents on the Euro USD. What was that to say? Overall momentum on the Euro USD still remains strong to the downside. Maybe we are looking at a little bit of a potential bounce at this point in time around 95, but that's kind of the limit to it. If you have a short position on the Euro USD, you should be moving your stop losses up, start locking in those profits. At this point in time, if you really want to stay on that swing trade on the Euro USD, you really want to move it to 97, at least towards 97, at least lock in those profits. That's about 300 pips. If you go short on the Euro USD, if you go short on the Euro USD at 1.01, at parity or at 1.01, mine was around 1.01. Hey, no issues at all. Lock it into 97. That's about 400 pips locked in for the Euro USD. By the way, we haven't talked about potential adjustments on the pound USD for those that are holding short on the pound USD. In terms of stop losses at this point in time, it's really up to you. I would probably move it to 1.1. Just give it a little bit of a room, about 100 pips from its high at 1.09. But again, the choice is yours. My entry was at 1.1460, right? You guys in the Telegram channel know about that. But if you want to move it up, that's fine. You can lock it up to maybe about 1.0950 if you want to. You can lock it down to 1.0850 if you want to. That's still completely fine. But I would say, hey, you know what? Give it a little bit of a room to go. No rush in adjusting your stop loss at this point in time. Just lock it in, and if you want to let it roll, just make sure you adjust your stop loss. That's it. It's kind of a waste if you don't lock it in at this point in time. All right, so we'll talk about dollar Swiss in a minute. I just want to reaffirm Euro USD. We are good with Euro USD. This is from Monday, and range is pretty tight at this point in time. It is still below the Ichimoku cloud. This is the pivots for today. We are still trading below the daily pivot, bouncing around 95.50. We are going to be looking at support around 95 cents on the Euro USD. But if you take a look at the momentum on the early time frame, we might get a further continuation to the downside. If you're still planning to go short on the Euro USD, or if you're planning to go for a breakout scenario, just make sure there's an hourly close below 95.30, about 5 pips lower than the swing low. It's okay. So if you want to add on to that position, that's completely fine, but trade it as a new trade. Don't mix it up. Just make sure your stop losses are just above the daily pivot in terms of target level. We are quite done with this one. Sorry, about 95 on that one. You can go for 95 or 94.50 on the new one if you want to. Risk reward ratio wouldn't be that great in terms of the trade, but once it breaks, it should have enough momentum to continue to attempt a break below 95 cents. If there is an hourly close below 95 cents, then you need to move your stop losses to break even immediately once it does break below 95 cents. Okay, so if it does break below 95 cents, you need to move your stop loss to break even. Then the risk reward ratio would be super attractive. Until then, your initial stop loss would still be above 96 cents for the Euro USD. Okay, so is it worth taking? I guess if you still have a running position on the Euro USD, hey, I think it is worth taking. Okay, next up, let's talk about dollar Swiss. I haven't talked about dollar Swiss in a long time, but let's double check in terms of our projections from the daily. Ooh. All right, if this is new to you guys, I'm using Fibonacci extensions and retracements to kind of give me a target in terms of how far a move can go and stuff like that. At this point in time, it is really close to 127.2%. Expect a little bit of a parity on dollar Swiss. Okay, so we are going to be looking at parity very, very soon with dollar Swiss. So if you do have a long position on that, just keep an eye out. There are certain limits to how far it can go. I wouldn't go for the 161.8%. It is about 100 pips above parity. A bit tough. You guys know how it is. I've seen the Aussie USD break parity, right? 10 years ago. You guys probably are experiencing the first parity with the Euro USD, so we might see that parity with dollar Swiss right now. We might see that parity with pound USD, and the lesson is every time it goes to parity, it doesn't break it immediately. So maybe that's kind of a cue if you want to step out for a little bit, just enjoy your trade. Okay, but in terms of daily, looking for a little bit of potential pullback, but this doesn't really indicate anything at this point in time. But if we switch on to the hourly time frame, okay, Javier is looking for a potential buy in the dollar Swiss. I would say make sure price goes back up above the Ichimoku cloud first, or at least doesn't close below the Ichimoku cloud. If you go in right now from the current position, it is a little bit risky. Okay, this is the current support as it is. If there's an hourly break below this level, I wouldn't want to go in for a long. There's a lot of uncertainty. That low is actually at 98.50. So if you want to highlight that in your chart or anything like that, that's an option. Just keep an eye on 98.50. Okay, if there's no hourly close below 98.50, it could spike. I don't care. Okay, if it bounces back up above 98.50, the momentum switch around, then yeah, that's time for you to jump back in on the dollar Swiss. But until that happens, if it does break below 98.50, we might get a better price around 98 cents. Okay, so 98.50, if there's no hourly close below 98.50, then go for 98.50. If it does break below 98.50, then the buy you're looking at is probably going to be at around 98 cents, but make sure 98 cents holds. Make sure there's no close below 98 cents. Okay, if it does break, then obviously you still have your next stop at 97.50. Again, I wouldn't be looking at price at this point in time. I'll be looking at the momentum. Once it switches, then that's my cue to jump back in on dollar Swiss. So no rush with the dollar Swiss. I mean, if we are expecting Euro USD and the pound USD to be weak, then we are obviously expecting the dollar to be strong. What do you think the possibility of pound USD parity? Is it higher? Yeah, I would say right now. I think I did mention this on the outlook that there is a potential towards that parity level. If the Bank of England doesn't move as quick as the market needs it to be, it might get to parity and before Bank of England does anything. Now, I don't really, Bank of England's track record is a little bit, I wouldn't take their words for it. That's one. That's just me towards Bank of England. They are really wishy-washy in terms of their monetary policy decision making. It's not like the FOMC, which is like super determined. It's not like the Bank of Japan, which is like, hey, we need to intervene, and they did intervene. So I think the Bank of England works in a way that I'm going to intervene in the bond market just to scare off whatever it is, just to bring back a sense of safety into the market in terms of the UK financial market. We're not talking about the currency market in general. We're talking about the whole economic financial stability in the UK, because you really need to understand, the government is the in terms of tax cuts and whatever. That's fiscal policy. The Bank of England does the monetary policy. So whatever the Chancellor does, it's not really Bank of England. Bank of England does another thing, right? But at this point in time, they want to stimulate demand in an economy where supply is a little bit tight. That's going to push inflation. That's actually called a demand push inflation. So if the government's fiscal policy is to push demand, the Bank of England is to cut off that demand just to bring the inflation down. Obviously, it's not going to work. So yeah, is there a higher chance towards parity at this point in time for pound USD? I think there is a higher chance for that. In terms of possibility, I would say it is above 50% for a potential move towards parity at this point in time. So for those that jump in, I think I did spend about 15-20 minutes talking about the pound USD alone. You can review it. That's fine. Once this is done, just review it again and take a look at it. Okay, but for the dollar Swiss, I would say no rush with the dollar Swiss. Just time it right. Okay, for this one, for you to get on the dollar Swiss train, unfortunately, you might have to kind of set an alarm every hour just to find out what's going on with this stochastic. Just track it on the hourly time frame. That's completely fine. But in terms of how far the dollar Swiss can go, we are looking at a potential towards parity for the dollar Swiss as well. Okay, right. We did talk about pound USD, Euro USD. Next up is Aussie USD, and then we'll touch base on the dollar yen. This is the Aussie USD. Aussie USD is great. Okay, so Aussie USD, I think we're pretty clear on this one. This one got pushed a lot. In terms of whether or not if you have a short position on Aussie USD, it's time for you to clear off your Aussie USD. I clear off mine. So right now, this one has touched 161.8%. It is at 64 cents. This is also the projected target for the Aussie USD. I would say for the Aussie USD, get out if you have a short position for the Aussie USD. If you really want to stay in the Aussie USD, then you really need to move in your stop losses. And we need to go by the hourly time frame. If you want to start moving your stop losses, you can move it up to about 64.60 if you want to. Majority of you got this short from 67 and 66. So that's kind of the range. Either get out now or start moving your stop losses to about 64.60. I wouldn't place it at 64.50 exactly, because if we take a look at this one here, there is a potential for a little bit of a correction to the upside. I think we are in that phase right now for the Aussie USD. It does break above 38.2. Take a look at where the 61.8% is. Make sure your stop losses are above that 61.8%. You want it to be a little bit safer than place it above 78.6. If you really want to stay in that short. Okay, so if you're looking for a short position on the Aussie USD right now, don't look for that short position right now. I think we are still within a little bit of an intraday correction. We might test 64.50 before it kind of fails at 64.50 or 64.60. That's probably where your Q is if you want to go short for the Aussie USD. But just in terms of the disclaimer and stuff like that, I'm out for the Aussie USD. And if you have been holding short on the Aussie USD from 67, 66, like we talked about in the webinars, I think it's about time you clear off that position. If you really want to stay in, just make sure you lock that profit to about 64.60, 64.80. If you're okay with giving a little bit of a room, you can have it at 64.80. But if there is that rejection at 64.50, make sure your stop losses are actually above this swing high. So you need to have it around 65 in terms of target. We are going to be looking at a little bit of an extension. So, you could be looking at around 63.50. Risk reward ratio, completely great. But with all the other currencies out there, in terms of volatility, it is huge. So this is not the week for you guys that just want to have a 20 pip stop loss. That's like really throwing salt to the ocean. It's not worth doing, right? You need to give the market whatever room it needs to have, and that room basically doesn't fall below 50 pips. Like the pound USD, you are going to be looking at about 250 pips, right? It's huge, so it's not going to be for everyone. But I mean, hey, we are not going to go against the US dollar at this point in time. We're just going to go with the flow at this point in time. Okay, so if you're planning to go short on the AUD/USD, or if you're planning to hold on to your short, I would say move your stop loss to about 64.80, 65. That should be more than enough room. If you're planning to go short today, or you're looking at a trade for the AUD/USD, it was a great trade on Monday and last week. At this point in time, you know, you're better off with something else. But yeah. Nothing major coming up from the Aussie at this point in time. So you got two options: either get out right now, move your stop loss to about 64.80, 65, hold on to your short. That's completely fine. If you're planning to add more position, make sure there's a rejection at 64.50. If there is that rejection, then you can have your stop loss at about 65 ish if you want. You could be targeting about 63.50 to 63 cents on the AUD/USD. Okay, right. I see the view has dropped, so a lot of you are probably confused by what I'm saying. But anyway, for those that's been following whatever's going on right now in the market, stay tuned. All right, dollar yen is up next. This is a little bit unique. All right, really want to see what happens at 145. Okay, I really want to see what happens at 145. I think we could have an intervention from Bank of Japan again tomorrow, which is exactly 1 week from when they intervene. If they do intervene tomorrow, that would mean price is probably going to go above 145. It is really tough, right? This is super bullish at this point in time. If you take a look at the whole momentum, it is going to the downside. Price is not even going down, right? If it does break above 145, the only concern that I have is I really want to see what Bank of Japan does. If Bank of Japan intervenes, then we know that they are going to intervene every time it breaks above 145. So keep that in mind. We talked about this before. We talked about this on the outlook. We talked about this on Monday's session. If it does break above 145, I really want to see what Bank of Japan does. If they do intervene again, then you know what? That's a good job on their side. I think it'll take away a lot of the confusion. I think a lot of yen traders are going to trade within a range 142 to 145. So right now, what should we do with the dollar yen? This is going to be a little bit of a tough one. Take a look at the hourly time frame here. It is really kind of drifting just along 145 there. If it does break, you will see that movement to the upside very quickly, very rapidly. If you are planning to trade the breakout, you're not gonna get it. Okay, it's just going to be impossible for you to get on that breakout, because if it does touches 145, it will break a lot of support, a lot of stop losses. It will take away a lot of stop losses that's being lined up between 145 to 145.25. It will spike, but you will not be able to trade that spike. I don't think it's going to be possible. I think the spread is going to be crazy. I think the volatility is going to be super nuts. If you're planning to go long right now and then just kind of anticipating a break above 145, that could be a valid strategy, but make sure your stop losses are at 144 max, right? You really don't want to have your stop losses at 143, whatever, because once Bank of Japan intervenes, it could push the dollar yen to 140, just like last week did. Okay, so let me put this into perspective, this is when Bank of Japan intervenes. That's how far it dropped down. It dropped down 550 pips, which is 5.5 yen, right? So if you do want to go long and then go for that spike above 145.50, do keep in mind, you know, your position might not get closed depending on the spread and stuff like that. Factor that in. If you're planning to go in long and then just go for that, you know, potential break above 145.50, maybe 145.75 or whatever, make sure your stop losses are really tight. I wouldn't want to have it more than 144, because anything more than that is not going to be a great risk to reward ratio. Right now you could be risking about 50 pips for a, you know, a quick boost towards, you know, 145.50, but again, you might not get it as well. Price could just linger back down because a lot of people are going to be afraid with what Bank of Japan is going to be doing. So put it into perspective. If you go by technical reasons, you are going to be looking at a potential ascending triangle, blah blah blah, but you need to understand what's going on, that the Bank of Japan is likely going to intervene again. So this is going to be a high risk trade. If you are planning to trade the breakout, you're not going to get it at breakout. It's not going to be possible. You probably don't have enough time to get in. It will be short-lived. Okay, but if you go in right now, the risk is, hey, the market might take away that 50 pips because it's not enough in terms of range to take on this trade. So again, I'll leave it up to you on this one. Some of you still have that dollar-yen position holding on to 145 for a potential target. This was mentioned last Monday as well. So it's really a choice. If you really want to hold on to that long, just make sure you start locking in those profits. All right, gold. We'll talk about gold. Actually, you know what? I'll talk about sterling yen first, and then we'll talk about gold. How's that? Okay. Sterling yen, blah blah blah. Huge spike. We got that support 148.50. Sterling yen is going to be a little bit of a tough one because we actually don't have that push like the dollar yen. Again, here's the risk. If you are thinking, hey, it bounces off from 148.50, daily momentum is likely going to turn around, blah blah blah. It is not a hidden bullish divergence because the market is technically flat, so it's not in an uptrend. So this is not going to be. Let me just write it down. Not a hidden. Okay, it is not a hidden bullish divergence. And maybe I'll give a reason here for market not in an uptrend. Okay, so it's not a hidden bullish divergence, so don't misunderstand what's going on with the sterling yen here. Okay, let's talk about sterling yen here. It's tough for the sterling yen. You know, as I said, the intervention from the Bank of Japan, if they do it once, it doesn't have an impact. They basically need to do it every time it hits a certain level, like the Swiss National Bank did in 2015-2016 with the euro. If the Bank of Japan is really committed to maintaining the yen prices from falling further, then they will likely intervene again. Now, combine that with whatever's going on with whatever's going on in the UK right now, in terms of economic and financial stability, it's negative plus negative. It's not going to be positive like normal maths does. It will just add on to that negative sentiment if the Bank of Japan intervenes. Okay, so daily, we haven't seen that cross yet. So I would assume the momentum is still to the downside for sterling yen at this point in time. If we go into the hourly time frame, okay, got rejected from the daily pivot and resistance one. Momentum is crossing to the downside. If you are planning to go in for a potential short on the sterling yen, you could. I think you might get a better pricing on this one. You know, stop losses could be about 157.22, 157.25. In terms of target level, you could go for 150. That's going to give you a great risk to reward ratio. But again, no trades are going to be small. this is looking at 300 pips of stop loss. Okay, much larger than the pound USD, and a potential for 427 pips gain. I guess it's kind of even out, right? But think about it, that's the room you need to give to the market. If you're not willing to trade with that kind of stop losses, stay away from the market. This is not the market where you dictate what you want from the market. It just never worked that way, right? So the market is telling us the minimum stop loss is going to be about 300 pips. It really depends. Do you want to take on that position? If we take a look at it from a fundamental perspective and look at it from a technical perspective, you know, you have that risk from the UK. If Bank of England continues to go and buy bonds or their gilts, right? If they do that bond buying program, that's really gonna push the sterling down. So basically what Bank of England does right now, they don't really care what happens to the sterling. If that happens, then sterling's going to be weak. And if the Bank of Japan intervenes, that's going to add on to the sterling yen. It might really push it well down below that 150, 149 level on the sterling yen. Okay. So huge potential. At the same time, it is going to be a huge risk for the sterling yen. If you're not willing to risk 300 pips, stay away. Find other trades to look into. Okay, I'm not here to tell you, hey, you can trade this with a 50 pip stop loss. Not gonna happen. This is on the hourly time frame, and that's the minimum stop loss. If you take a look at the rejection from resistance 1 on the daily, huge. Right, it is still well below the Ichimoku clock. It might not look huge to you. It looks like a small candle and stuff like that. Hey, it's huge. Okay, so the drop, if you take a look at this candle, maybe it'll put a little bit of a perspective into what's going on there. That's a 500 pip candle in 1 hour. So yeah, expect huge range if you're gonna be trading sterling. And yeah, I'll tell you straight up, I trade sterling yen, I trade cable, and I know this very well. In terms of range, this is actually one of the largest range that I've ever seen. I traded the pound down from $2 to 1.34. I believe it was 1.34, 1.35 back during the global financial crisis. I got a lot of entries to sell to the downside, and I've never come across a range as huge as this and as quick as this. So I don't know if this is going to be the trend going forward. I don't know if the whole financial instability going on in the UK is going to be long lasting. But taking a look at what the UK government is planning to do, it's really going to create a new debt crisis in the UK. So this is a potential debt crisis in the making for the UK. So if they are going to go ahead with their fiscal policy, that's going to create a huge debt market. Then, you know, in a year or two, you are going to be looking at a potential scenario like the subprime mortgage crisis, very close, a very similar situation there, or the Greek debt crisis, so the whole sovereign debt crisis that we saw about 10 years ago. Okay, but this is the UK we're talking about. They're not really in a strong condition. Back then they're still with the euro. Right now they are out of the euro. If they do this, it's really gonna have a huge impact on their financial stability at this point in time. Okay, so done with sterling. Let's take a look at gold. How low can gold go? I think gold it's pretty okay. If you're asking me how low it will go, you know, we still have that potential support at 1,600. I am actually pretty surprised. This hasn't moved a lot faster, considering how hawkish the FOMC is. Maybe it's more of a, you know, there's a little bit of a risk building up, a risk selling building up, and that's probably what's propping the gold at this point in time. I still don't want to go long on gold. I think it's going to be tough going long gold at this point in time. If we take a look at the intraday pivots, the daily pivots for gold, you know, it's still going to be below the Ichimoku clock, or, you know, we have that 1640 potentially towards 1650. But in terms of key resistances, if we draw 1650 and 1640, maybe it'll paint a little bit of a perspective there. I wouldn't want to be looking for a long. If you think going long right now towards 1650 is worth it, let me put it into perspective. If you go long right now, your stop losses are going to be here, your target is going to be up there. Risk reward ratio just doesn't make sense. You're going to risk double. You're going to risk 22 bucks for a potential 12 bucks. It just doesn't click, right? Unless you have a long position on gold, then yeah, don't expect too much. That's what I'm going to say. Because if we take a look at the range of resistance between 1650 and 1640, that's basically where it is between resistance 1 to a key level at 1650, basically just $1 below resistance 2. So it's not going to go out of range. I don't expect a move towards like 1660, 1675 in one day. Just not going to happen. So we are towards that end there. If you do have a long position intraday on gold, maybe it's your cue to start scaling out a little bit. It's just about $3 to 1640. Still have that momentum going on, but again, momentum doesn't really translate in terms of currency movement, in terms of price movement. So if you are long, if you're long gold, yeah, maybe time to scale back out a little bit. I wouldn't want to go long right now. I would wait for an opportunity for me to look for a potential rejection. But again, I'm staying away from gold, and I've been away from gold for the past 2 years. The past 2 years just hasn't been that interesting for gold. Okay. Let me go through the chats here. Do we have anything else? Alright, we got request stop loss on pound. We did that. We've got stop loss adjustment for EU. We did that. We got stop loss adjustment for the USD. We did that. That's completely fine. Okay. Euro USD, we talk about Euro USD. Aussie Yen, are we going to go long for the swing? Alright, I missed out on the Aussie Yen here. Let's take a look at the Aussie Yen. Just keep in mind, whatever it is, in terms of intervention risks from Bank of Japan, it's going to have a spillover effect into the market here. Are we going to go long for the swing? If on the 4-hourly time frame, let's go into the 4-hourly time frame. If price is above 93, can we go? Can that push the potential for hidden divergence on the daily chart? You're looking at the 4-hourly time frame for hidden divergence on the daily chart. Again, let me put this into perspective. It's going to be a little bit of a tough one to call this a really strong hidden divergence. It is still going to be considered a hidden bullish divergence, but take a look at how flat the market is from June. If you take a look at that range, it's 3 months or more, 80 days, right? 80 trading days. That's technically more than 3 months. I wouldn't want to call this a really strong hidden bullish divergence. Once Bank of Japan intervenes in the market again, if the dollar yen breaks above 145, it will have a risk. That risk is going to be a contagion. That risk is going to spill over to Euro yen, Aussie yen, sterling yen. It could take the Aussie yen down below 92, potentially back towards 90 yen. It's too early to call this a hidden bullish divergence, especially if you are aiming for an entry on the 4-hourly time frame to jump in. Okay. I know what you're looking at. You're probably thinking this is a potential regular A. It's not. It's not a full cycle. It's not a really good indication. What it does tell you is that, 92 holds as support right now. But if you're looking for a 4-hourly time frame to adjust it to get in earlier before that divergence happen on the daily time frame, I think you're doing it wrong. Okay, so don't do that. At least don't do it on the 4-hourly time frame and the daily time frame. Which fib It's still being used on pound USD. Pound USD, it's up to you. You can use the hourly fib. That's more than enough because in terms of range, it's really huge. So yeah, I think the hourly fib is okay. You're not gonna be able to draw a new fib on the daily. That's the problem. So I think the hourly fib should be okay because you're looking at a huge range here, about 575 pips of range. Okay. So fib still being used on pound USD. It's going to be the 1 hour time frame. The 4 hourly time frame is going to reflect the same fib. So yeah, either one is going to be the same. A bit late, no worries. Okay. So, not a lot of requests tonight. Are you guys out of the market, or you guys are not looking at new positions, or what's going on here? I think this week, for a lot of you guys, it's really more on the adjustments in terms of stop losses and whatever. For the Euro USD, we haven't touched this into detail in terms of stop loss adjustment. Whatever Monday's adjustment was at 97.50, that's still going to be that. You can move it to 97 if you want to, but I would still have it at 97.50 and be done with the Euro USD. In terms of range, we haven't seen a huge range on the Euro USD. Partly, it should be attributed to the Euro Pound, which we didn't take a look at on Monday. So this is the Euro Pound. All right, it's basically spiking up left and right here on the Euro Pound. So broke through a lot of that resistances, 86, 86.50, 87, broke above that. Market came back to test 87, break even higher. Take a look at the range on the Euro Pound. We didn't really touch base on the Euro Pound, which we should. Okay. 586 pip on the Euro Pound. If you take that, you kind of double that. It's very similar to 1,000 pip movement on the Pound USD or the Euro USD. So Euro Pound is well supported, so that's why you're not seeing a huge movement on the Euro USD. At this point in time, if you take a look at how the momentum is on the daily, it is currently pulling down. So you should be anticipating more of a hidden bullish divergence happening on the Euro Pound. Right now on the Euro Pound, might see market get quiet a little bit, but we should have support at 88 and 87. Okay, 87 should hold. I don't expect a move towards 87. I really think 88 would probably hold before market goes towards 87. But take a look at the whole thing right now. We can get rid of 86.50 and 86. You need to pay attention to 88 and 87. So yeah. As long as this momentum is still going down, we're not going to be looking for that potential breakout. And if you really watch this very, very closely, we do have a resistance at 90. Okay, so 90 is still capping it until we see a break above 90. You're not going to be looking at a run on the Euro USD. This is going to support the Euro USD. So Euro USD right now, even though it's weaker against the US dollar, it's likely going to get supported from the Euro Pound. This too, you need to consider how close they are, and they used to be part of the same zone. So yeah, Euro could get propped if the Pound USD collapse. Okay, if Pound USD goes towards parity, then yeah, we are going to break above 90 on the Euro Pound. Are we going to be anticipating a parity on this one? Probably not, but maintaining a position above 90s, that's going to be tough for the Euro Pound. Okay, so Euro Pound, pretty clear. If you jump in on the early time frame, it is a little bit choppy at this point in time, so I wouldn't recommend a trade on the Euro Pound until we have further breaks on the Pound USD. Okay, or at least the daily maintains a position above 90 on the Euro Pound. Okay, next up, WTI. I need to get my chart sorted out. On oil, okay, we got that bounce from 77. Let me just double check, because I haven't really compress all the chart for oil on my side. Okay. We're looking at a little bit of a divergence maybe on the daily potentially. On the hourly, this is gonna get a little bit tough. I think we're looking at 79. Something is wrong with the candles here. We're looking at 2 green candles. That means there's a gap down in the hour back towards 79. Am I getting this right? Let me just double check with the UK oil. Okay. All right. Let's go back here. This is, so we are looking at a potential return towards 83. Okay, let me hide the pivot for a little bit. And I'll go to daily. So previously when it broke below 89 and 88, we were looking for a move towards 83. We broke below 83. We haven't seen a correction towards 83. The current move to the upside could be that correction towards 83. Now, if we go for the FIBs on this one, I'll probably check on the 4-hourly time frame FIB. Are we gonna get? Yeah, okay, fine. The 4-hourly time frame is going to be this swing to this swing. Yeah, the 61.8% is going to be about 82.50 to 82.25 to about 83. So we could be looking for a little bit of a pull back towards 83. This could be an okay intraday trade, or at least for this week. Just make sure your stop losses are going to be below 76. Let me see if it's worth the risk reward ratio. I wouldn't go for 83 exactly. I would probably go for 82.25. No, it's still not going to be worth it. Risk reward ratio is not going to be great. So yeah, unless you have a long position on oil, the US oil, then I would probably stay away from this one, because I'm kind of expecting a potential return towards 83. If it does get rejected 83, then it's okay. If you really want to jump in right now on US oil, yeah, you just don't have a small stop loss, because we go by the swings. That's the only swing that we have right now. So you can't really have it. Oh yeah, I just want to have my stop loss there. I just want to risk $1. It's not gonna work that way. Okay, market kind of warn you, this is the current range that it is. Minimum is around 76.50. A risk reward ratio is still not going to be great. Even if you go for 83, it's not going to be much. It is still going to be about 1-to-1. So yeah, unless you are already in a long position for oil, I wouldn't be looking for that move today. Take a look at the momentum on the early time frame. We are really pushing past 80 at this point in time, and there's still Ishimoku cloud as potential resistance. So I think it is a huge risk if you jump in right now. Risk reward ratio is not going to be ideal. It's not going to be optimal. Can we look for a position long on oil? No. So I know you guys are anticipating that. I am anticipating that. We were there last year when price was around 62, right? That's where we picked it up. Is it time yet? No, it's not time yet. Number one, we don't have clarity on the whole how strong the dollar is going to be. We don't have. There was the Nord Stream blew up, right? If you guys didn't know, I think Europe is basically saying it was basically an attack from Russia. If you guys didn't know, Nord Stream pipes actually there was an explosion, still being investigated. They don't know what's going on, but yeah, might see that push. I mean, if it is such a huge impact right now, price would be above 85, but we're just not seeing that, right? We should be seeing price moving closer to about 90. We're not seeing that. So I think it's a little bit too early. It is still autumn. We just transitioned into autumn, so it's not quite winter yet. The demand for it is still not there yet. Number one, there isn't really more of a this sounds really bad and barbaric, but there's no continuation to what happened last week in Russia from the announcement from President Putin. So yeah, it is a little bit too early. I would hang on for a little bit. I just don't have that confirmation yet. I don't have that confidence yet to go in for a long. I would go in for a long position if the Ichimoku cloud goes down lower. So I'm just not seeing that. You probably are gonna be picking up stuff in November. Even if you take a look at November, we already know the turning point is going to be about 90 bucks, right? That's where the Ichimoku cloud ends. And that's the 3rd of November 2022. So either price move towards 90 and break above 90, I would say, yeah, that's time for you to go long, and hold it for months if you want to, once it goes above 90. But until that happen, I'm just not seeing it at this point in time. So yeah, unfortunately, really want to hold it for a long period of time like what we did last year. This is not going to be the time yet. Might pick it up in November. Okay. But again, it is going to be around 89, 90 level. So I'm not really too concerned. So I'm not really gearing up. I'm still, I'm still putting my portfolio somewhere else. I'm not really focusing it on oil. So that's my view on oils. If you are trading this in a short-term perspective, then I do expect a potential return towards 83 at this point in time. See if the pivots line up. Okay. Okay, I have a drop connection. I'm really sorry. We got disconnected for a little bit. We should be back online. I don't know if you guys are still here. Okay, so my view on oil, does it make sense? Hopefully it does. Okay, sorry for the drops. We should be back. Well, look at the time. It has been 1 hour. Last request from anyone? Alright, just to recap, my concern for tomorrow, it's going to be a potential intervention for the dollar yen if it does break above 145. And it will happen tomorrow if there is going to be an intervention. Okay? So I would keep a very close eye if you're trading dollar yen or any yen, whatever. Keep an eye out on Bank of Japan if they are going to intervene tomorrow at 145. If they do, then it's going to have a spillover effect. The dollar yen is still going to be okay. Dollar yen is likely going to be well supported. The pound yen, the euro yen, the Aussie yen is probably going to get smashed tomorrow if there is an intervention. So this is going to be your risk for tomorrow morning. If you're trading the market during the Asian session, especially with the yen crosses, don't sleep on it. Whatever time frame you're on, wake up whenever Japan wakes up tomorrow, because there is that potential they're going to pull that trigger again if the dollar yen breaks above 145. Okay, so let me just type it out. Anticipate BOJ intervention above 145. Okay, so keep that in mind, you'll be good. If you understand the whole context on the potential intervention by Bank of Japan, just keep this in mind. Okay? Alright. That's 6 a.m., 8 GMT. Unfortunately, you just have to be up when that happens. Oh, well, what are you gonna do? Market kicks off, that's it. You have about until 9 a.m. Sydney time. Sydney is GMT 10. Daylight saving is actually going to be this weekend, so yeah. Is it going to be GMT 10 or plus 11? But you still have time. Anyway, wake up. If you have a position on yen crosses, do keep an eye out on dollar yen. Whatever you're trading on, euro yen, Aussie yen, whatever, the focus is going to be on dollar yen. This is going to be the benchmark that the Bank of Japan is going to take. Okay, so good luck with the trades. And we do have that session for Fibonacci on